Gold has been blasting to new records this year. I'm holding today, last time I checked, above the $5,000 US level. Are these long-term drivers still in place? So-called currency debasement, etc. We're joined by Brooke Thackray, research analyst at Global X Investments Canada. Brooke, thanks very much indeed for joining us.
Thank you.
I mean, the big question, I guess, with gold, or one big question, is it a crowded trade? Has everybody done their buying?
I don't think so. I mean, if you take a look at excitement around gold in the media, it's been really hot. But if you take a look at actual investors buying into the gold trade, buying gold ETFs, it's still in the Western markets has actually been quite small. Gold's still a relatively small portion of investors' portfolios and institutions' portfolios. So I don't think we're done. I think the drivers are still there. We still have the central banks, the Eastern central banks mainly, buying a lot of gold. China just announced it's had 15 months in a row of net buying gold. So the major drivers are there. We've seen some volatility, obviously, with gold. I expect that to happen, but I think we're going to be range-bound here for a bit.
What about silver? I see a strategist at BNP Paribas is saying that silver, which has had that incredible run, is likely to underperform gold in the next while because it doesn't have that cachet or that established presence as a hedge against political risk.
Yeah, and central banks aren't buying silver. I think silver had a fantastic run. It became almost a little bit meme-like, and I don't think that's going to continue at that level. If you take a look at something like the gold to silver ratio, silver became extremely cheap in early 2025, and now it's really become about average compared to historical norms, and the silver trade's really being pushed up by the consumers, the retail consumers in the East. I mean, there are other factors, so it's a bit different. I think gold can actually probably do a little bit better here compared to silver.
The US dollar, let's put up a 5-year chart for the US dollar. If there was a major rally in the greenback, that presumably would put pressure on gold.
Yes. If we take a look, though, it has broken that relationship several times over the last couple of years. But I think at this point, when we're in a consolidation period, that if we do see the U.S. dollar gain some strength, I think that would put pressure on gold and silver. But previously, we've seen the U.S. dollar do okay and gold also do well at the same time because investors were focusing on the currency debasement trade. I think they pulled back on that narrative a little bit, and they're going to more closely react to the U.S. dollar. Like yesterday, we saw the U.S. dollar get hit in international markets, and gold did well. But so a lot does depend on the U.S. dollar. I think it's one of the most important variables for investors to be following in the markets right now. Even if you're a stock investor or a bond investor, I think the U.S. dollar is one of the drivers that's going to affect not just gold and silver, but other parts of the market.
What about Air Canada? We now learned that WestJet, Transat, and Air Canada all suspending flights to Cuba because of the fuel crisis on that island. What's your view on Air Canada, though? Are you keen on that stock? Obviously, tremendous leverage. Once you've got this massive fixed cost base, but once demand takes off, when and if it does, your profits can rise rapidly.
Yeah, the Cuban situation, I don't think, is a big impact on Air Canada overall in the grand scheme of things. We've had a couple things. Late 2025, we saw the flight attendant strike. Then we've seen airlines, including Air Canada, cut back trips to the U.S., which has had a bit of an impact. International travel has still been strong, and all indications are that it's surprising to me how strong it is. That it's still there. I think it's a little precarious on a go-forward basis. We've seen a lot of this, as far as the spending goes, from consumers at the lower income groups has just fallen off the face of the earth, and that's slowly coming higher. Air traffic or trips is still maintained okay here. I'm concerned that we might see that actually turn down later on in 2026. I think, Air Canada has really consolidated over the last while here. It really hasn't done very much. It's had some spurts and pulled back. So it hasn't really been a great stock from that perspective. I don't see anything changing. I don't see major drivers to push this stock much higher. It's had a couple little blows here that start to add up against it, but I don't see a big driver to move the stock higher. This is not a stock that I would be looking at this time.
What about Shopify? It's getting a decent rally today, but it's way down from the start of the year. Wow, it was $215 at the start of the year, and now only about, well, as you can see, 171 in Toronto trading. Is this a name you're interested in?
Well, I think we could see a bounce in Shopify here. We saw that yesterday. We saw it today as well. They report their earnings before the bell tomorrow morning. And I think investors are positioning themselves for that. There's just this AI dynamic is a very fluid situation about who the players are, who's winning and who's not winning, and who's going to lead in the future. And we've seen the software stocks overall as a group just get absolutely pummeled, and Shopify was in that group. It didn't matter. I mean, Thomson Reuters the other day went down huge, 15% in one day because of an announcement by Claude, basically, or the agentic experience as far as that goes with Anthropic. But I think Shopify is going to lead the way. If you take a look at where consumers are actually going to experience AI other than searches, right now the average person is just using AI for searches instead of using Google. They're actually going to AI and doing a search, and they're finding value in that. But where are they actually going to use it to do something beyond that? And I think the first beachhead is going to be in the whole shopping experience. And Shopify is really working extremely hard on this with the UCP, the Universal Commerce Protocol. And they really want to create this experience for consumers to go in, and so you'd have an agent, go and find products for you, compare products for you, recommend products, use coupon codes, check out for you. So I think there's going to be a lot of winners and losers in there, and I think Shopify is going to do quite well with that. I think the losers are going to be some of the smaller companies that just can't keep up with the scale.
I've noticed now when you're watching an Amazon ad on Prime, they have a link for you to click on to actually buy the thing. So yeah, we're just in the early days of this.
Yeah, and if you take a look at Google, I mean, I saw Elizabeth Warren, complain that Google was now putting in, complaint that Gemini is taking you right to the instant cart.
Yes.
So that space, that shopping space, is really going to heat up in competition. But I think Shopify is still in a good position given its current client base.
Yeah, that's interesting. Yeah, Elizabeth Warren, the Democratic senator in the U.S., saying this is blurring the line. Is AI, is it actually advising you on what product to buy, or is it selling you that product?
Yeah, well, I mean, it's going to be, I think, a little bit of both, actually, in the end. If we take a look at what AI has done in some of the conversations that it's had with people over time, there's been that line being blurred back and forth. And in the shopping, that's going to be hard to control because it will be making comparisons for products and outlining, and it will probably have a bias as well. It'd be interesting to see what the algorithms underneath, when they're making a comparison. If let's say, Google is receiving money from somebody for premium support, if their recommendations are actually being biased. They'll say that it isn't. I hope it isn't, and maybe it won't be, but that's definitely a danger.
Brooke, thanks very much. Brooke Thackray, a research analyst at Global X Investments Canada.